Today I want to talk to you about journaling, particularly journaling your trades. Now, I talk about this a lot. You've probably seen it, so selfish plug. I do have my own trade journal. You can pick it up completely for free down in the description. And it's actually what I'm going to go through today because there's tons of trade journals out there, digital ones. I'm sure plenty of analog ones like mine. But I wanted to talk through a little bit of why it's important to journal your trades and why and how I do that. And so the best way to do that is to actually go through the trade journal that I have for free. But before we get into that, trade journaling, I used to not understand, didn't really see what the point was. And it wasn't until I got honest with myself and realized that I wasn't really sticking to any kind of plan. I wasn't really evaluating anything. I was more so just gambling with a little bit of structure. And I often abandoned that structure whenever I felt like. A lot of times we will lie to ourselves about what actually happened and we will play it down. It wasn't as bad as it actually was. We will say that our emotions weren't as high as they actually were. And this is something that trade journaling fixes. But without that written data and regularly evaluating it, it's very easy to think that there is no common denominator and you kind of just brush it off and say, oh well, and continue going down the same path. So all that to say, trade journaling is, I think, crucial, and if you will force yourself to do it and to be honest, it will actually improve your trading. And so let's hop in, let's take a look at the trade journal that I have. So here I'm throwing this into GoodNotes. You can literally import this into anything you want. If you wanted to do digital, if you just wanted to print it out and have it, paper on your desk, you could do that as well. I'm kind of this hybrid. I'm doing an analog form, but I'm doing it in my iPad. Specifically, this journal was made to be used where before you enter a trade, mark on this for you. Before you enter a trade, you complete section 1 in full. And if you can't answer every question clearly, then that setup is telling you something. Don't skip them and don't enter anyways. And this was to keep myself from just hopping into trades without evaluating whether it was a good idea or not. Then while the trade is still open, you note any emotion shifts, any urges to move your stops, temptations to exit early. You don't have to necessarily have a place to write this, but just stuff to be mindful of in the middle. And then immediately after you close, complete section 2 before you look at any other setups or another chart. And honestly, I have found that if I don't do this is when I tend to just hop back into trades hastily and end up, again, blowing accounts because making stupid decisions. And then at the end of each week, you can review, flip through your entries, look for patterns, all kinds of stuff that we talked about. So again, this all takes you being very honest with yourself. And as this says right here, if your pre-trade section is honest, then your post-trade review becomes data. If your pre-trade section is rationalized, in other words, you are not being honest with yourself, then your post-trade review is just a story that you tell yourself, and there's kind of no point in journaling if you're not going to be honest. So what we have in here is 2 sections. This is section 1 that needs to be done before you enter a trade. This is where you would add the date, the time, the ticker, the instrument that you're trading, whether you're going short or long. And if you wanted to keep track of what account or accounts you were trading, I don't necessarily journal that because I'm mainly trading prop firm accounts and it kind of doesn't matter to me which account it was, but that's there for you. Then setup quality, which is this section here, is kind of tailored towards me and how I do things. However, I think this is a great way for you to structure your trades if you don't already have a way to judge whether your trade is a good setup or not and how good of a setup. Is I calculate mine as A plus A, B, or C, and anything worse than C is something I don't take. And honestly, lately I have not even been taking C's because I realize they're not that strong of an entry. But C's to me is there's one confluence. There is only one reason to get in this trade. A B is 2 confluences, an A is 3, and an A plus is anything more than 3, okay? And so I will mark, I typically will, I'll show you in a minute, I'd mark those. Then your pre-trade checklist, all of these have to be yes before entering. So this setup meets my written criteria and not a close enough version of it, so I would mark that. I can clearly define where I'm wrong on this trade, so an invalidation point is important. My position size is within my daily and weekly trade limit, so I have set limits for myself, and I highly recommend that you do that as well. And these need to be written down somewhere and maybe even a step further and enforced in your broker. So again, with like Top Step X, I can set exactly what my size limits are, and it will restrict me from going over those. I'm not entering to recover from a previous loss. I have not already hit my max trades for the day. The risk to reward on this trade is at least my minimum acceptable ratio, which for me is a 1-to-1. Anything less than that is just gambling and me just most likely trying to revenge trade and trying to gain $100 or something and risking 500, which is stupid. And then I'm not entering out of boredom or the need to be in something. So trying to prevent myself from just trading for trading's sake, but instead only taking trades that actually make sense. Then a place to put all of your price data, so your entry, where your stop loss was, your targets if you have more than one, the R to R ratio, and your position size. Again, I think all of this is important because, again, if I'm, realize that I'm always losing trades, but my RR ratio is always like a 1-to-5, well, there's a clear area there that I can go and adjust. Maybe I should cut that way down and probably go back down to like a 1-to-2 and see if things change. You'll find areas, same thing with like blowing accounts like crazy. If you're taking 3 contracts or 4 contracts or 5 contracts, well, that may be way too much and maybe you just need to scale down. It gives you very pointed areas that you can go back and fix or tweak. All right, the trade thesis, that is in 2 to 3 sentences. Why does this trade make sense right now? And what is the market telling you? Again, being as descriptive and as honest as possible. Then the emotional state before entering. This is important to me because, again, there's normally a correlation between trades that you lose and you being some kind of distracted or anxious or frustrated or something like that. And this would be just a good indication that, hey, if I'm feeling that, I probably don't need to enter this trade and I probably need to go on a walk or something, cool off before I come back. All right, invalidation. This is just literally writing out this one, down here. Writing out exactly where the invalidation is so that you're very clear with where you're exiting. All right, this is the pre-trade. So then after this, you would have section 2 where you do a post-trade review. This is where you put your exit price and information, how much money you won or lost. Again, if you wanted to keep track of your R value here, so risk to reward, which could be a negative number, right? You could have lost a whole or 2 or 3 or whatever if you moved your stop. Duration, how long did the trade go? Again, all important information. If you notice, you always lose trades, but they're trades that are 10 minutes long, which you got in when the market was moving too slow or something like that. And then the outcome. Then here we have execution quality. How well did you follow the plan? Again, this is pretty subjective. I tend to, for my own sake, not get in the weeds in here or in here, and I give myself either a 1, a 5, or a 10, just to make it super easy, typically. Same thing with emotional control. How well did you manage yourself during the trade? And then we get into our exit review checklist. So I exited at a pre-planned level, not out of fear or impatience. I did not move my stop loss to avoid taking the loss. I did not add to a losing position. I did not exit in a winning trade purely because I was uncomfortable. and I followed my plan from section 1 on this trade. Again, I like to get where I can check all of those, and if not, then that is a point that I try and work on in my next trade. And then you get into just describing what actually happened, what you did well, what you would change, what did this trade reveal about you. Again, be very reflective, thinking on how you were feeling, your emotions at the time when you took the trade, and be honest with yourself, and it will really help you. And then an area to flag this trade. So if I really feel like this is terrible and I failed in a lot of areas, then I'll mark this to review this later, so that when I flip through at the end of the week, I can just pull out the ones that had review marked. Or maybe this is an example of me violating my process, or maybe this is a strong execution and use as a reference for later. Again, emotional trades needs attention, or no flag needed. These are just ones that I've come up with. And then after that, we have a end of week review, which just allows you to kind of see how many trades you took, how many wins, how many losses, your net P&L, how many trades you took, what was your daily limit, were you within your limit? Again, more reflective questions. What did this week's trades tell you about your process? Did you drift from your rules this week? If so, when and why? One thing to carry into next week, and then your overall process adherence this week. Again, I try and stick with 1s, 5s, and 10s just to make it easier for myself. And then I have a little note down here for quarterly break check. I have made a video about this before, but I believe in taking a break from trading here and there. And so I try and at least once a quarter take a full week off from trading, just for the sake of taking a break, not because I was trading poorly. And sometimes it stinks even if I'm trading really well. I still need the break. You kind of just need to break away, get your mind off of it, get your mind back into real life, and come back with a clear head in a week after that. So the way I use all of this is I just duplicate these pages for my pre and post entries. So I have, ones that I have filled out over here for trades, and every time I'm going to go take a new trade, I just duplicate one of these and keep them all here, and eventually I archive old ones. So again, whether you use this trade journal or you use something online or you create something yourself, I highly recommend that you use some kind of trade journal and start journaling even the most basic things, so that you can improve on something every day, every week, every month, every year, whatever it is. You have to be improving. And to me, this is the only thing I have found that truly lets you be honest with yourself and make big strides in the right direction. So if you want it, it's completely free down in the description. Go ahead and grab it. Otherwise, I will see you on the next video.